What's the Fed going to do with rates in the short term here? We got another meeting coming up. Are they going to lower the rates by a quarter point, by a half point? Are they going to leave them where they are? We're talking a bit about that today. It would be an absolute catastrophe if they left rates where they currently are. I'm going to go through in detail as to what caused the inflation, as to why Powell is scared of inflation right now. He has PTSD from inflation from COVID. And I'm going to get into what happened and why we had so much inflation there and why inflation is not an issue at all. It is not, at least now moving forward currently. And this is a big reason he needs to lower the rates. We have a lot of bad data that has come out and some good data. We saw that in September they added 119,000 jobs. But I do expect, as what's going on almost a whole entire year, these will be downwardly revised. The government was closed for a while. They got data. They just pushed this data out. It's probably completely faulty. I imagine it's going to be a pretty sizable revision next month when they look at it again. But they did revise, and they had time to look at this, but they did revise August, which they thought had 19,000 jobs, and they lowered it. They actually lost 4,000 jobs. They also downwardly revised July and August should not be having reduced amounts of jobs. They should be pretty stable. They should be a pretty good time of year for you to get jobs. And we are losing them. September could typically be a big time for people to get jobs here. This month, I think, will be an outlier. We'll see. We're going to have holiday jobs coming up here. We're getting to Thanksgiving week here. So we're going to have holiday jobs for Christmas, for retail, that we're going to have a lot of shopping going on. But I do expect those numbers to be down pretty much from what they have been in the past. It's not going to be a typical Christmas season. But let's get into what caused the inflation to begin with. In 2021 is when it really erupted. But obviously, it started in 2020. And it happened with COVID. We had helicopter money. We had that emergency stimulus. And all it did was throw a ton of money at people, helicopter money is what I call it, who were just sitting at home. What did that do? That created a bunch of alcoholics, people who were depressed, virtual schooling, virtual everything, virtual work. From a virtual standpoint, it was a positive, but it was a very negative in as far as manufacturing, as far as jobs, as far as what was created. And manufacturing is a big reason we fell behind because manufacturing stopped creating items all around the world. And what happens is when you don't have enough supply and demand drastically increases and you pepper on top of that a ton of money just flushed throughout the world. Every country was doing it with a stimulus, throwing money out there. You have people who want to do renovations to their homes, people who wanted to buy new homes, people who are buying boats like crazy, people who are buying cars like crazy, people who are buying bikes, any kind of utility vehicle, people were getting ATVs. And that just threw inflation out of control. People had all this money and they just started spending on that, the PPP money. And so many companies took advantage of this. I did not take those loans, which would have been forgiven, which is a shame. I should have looked at taking that, but you could take advantage of the unemployment. And I had the ability to do that because I was also a realtor as well as being an investor. So I was able to take advantage of that and get some extra additional funds there, which I did utilize in some investment properties as well, which helped push housing way up. Housing went out of control. But remember, crypto also went out of control. We had a big season, big alt season from that helicopter money. People were pouring money into cryptos, pouring money into stock markets, pouring money into everything. So that is what created the massive inflation. Now, why won't we have inflation now? Again, there's no money being printed. There's no money being handed out to people, or nobody's getting helicopter money. So where is this coming from? And matter of fact, we have unemployment, which is 4.4%. It's the highest since October of 2021. So unemployment's higher than normal. We have a high unemployment rate for people aged 20 to 24, Gen Z. It's 9.4% for men at 24, 9% for women, 9.2% blended there. 25 to 34, it's 4.8%. People aged 25 to 34 is 4.8, which is still pretty high. And that's a pretty big, sizable demographic there of workers. You would figure they would be lower. And it turns out people that are older have a lower unemployment rate than that. We have a lot of factors that are pushing into the unemployment rate with AI innovation, reducing some jobs, and that's probably going to continue over the next decade or so at a more rapid rate later on as jobs are taken up and eaten up by AI, that it's just par for the course is going to happen here with innovation. So we can expect that. So manufacturing lost 6,000 jobs here September 2. That's a pretty big factor. Why else will we not have inflation? Okay, let's get back to real estate from the real estate perspective here. Rents have gone up for tenants. Utilities have gone up. So you go to homeowners. Insurance has doubled, tripled, or quadrupled in different markets. Real estate taxes have doubled in many markets and close to doubled and some more than doubled. So you have those additional costs that have gone up. Gas is still pretty high. Like I said, utilities, all these things are a big factor here. And what we don't have as well is 2.75% mortgages like we had in 2020, 2021, and even early 2022, which made more people go buy more investment properties because mortgage rates were so cheap. So we're all buying investment properties. I mean, it's almost free money. Who could blame you? And now mortgage rates are 6.25, somewhere in that range, creeping up a little bit after the drop they had over the past couple of months. So these are the factors as to why we're not going to have inflation at any crazy high level. I think it came in at that. You always love to see it lower than that, but it's not getting that 9-10% that they were worried about before. And Powell, who has PTSD with inflation, he's so worried about that he's not wanting to decrease rates. And he needs to, or the market will take a pounding like we have not seen. This is a tinderbox right now. And he's either playing with fire or he's being calculated, and don't think he is doing this. There's a very good possibility he's playing possum here, that he's floating, putting all these trial balloons out there because they do that and saying, oh, we may not decrease the rate. We may not drop it. And then they drop it. And then people are real happy and excited that they did drop it. But if you go in with the expectation of a drop, you don't get any positive effect. So psychological, it's a little psyops that he could be playing here. And that's where I think he's going. I'm fairly certain he's going to drop at least 1/4 point. He should do it 1/2 point. Really should. The market needs stimulated right now. We haven't been in a natural market in a long time. And I do believe the market needs to be stimulated right now. And hopefully that'll help rates longer term. Hopefully it'll help the mortgage rates. And hopefully it'll just increase economic activity going on out there. But this is the biggest reason we have lower risk of inflation. We have things that cost so much more. Think about how much groceries cost now. Think about how much it costs to fix your car, for the parts for the car. Think about how much it costs for a hot water heater. I used to get hot water heaters $300-$400. Now they're $600, $700, $800 for just a hot water heater. I used to get a hot water heater installed for $600-$800. Now it's over that. I've seen people charge $1,200 and $1,500 for hot water heaters. So all these costs ran up. Now they are starting to come back, which is good. Some of the pricing is starting to come back as the demand dropped. And this is why I don't expect any kind of crazy inflation. And this is what hopefully the Federal Reserve is looking at this. I don't have any faith that they are. I don't think they're that smart. I think they look at generic numbers. They look at the government numbers, which are all flawed. They should look at John Williams' numbers, who runs shadowstats.com. He's got real numbers on economic data, unemployment, all those things. But again, we're not going to have inflation. Only way we risk inflation is if more helicopter money comes out there. Trump talked about giving $2,000 stimulus towards for the tariff things. That would produce some inflation. It would. That is going to wreck the people, although people would be more likely to put it in savings right now than they would in anything else, just because people don't have much in savings. So we have some headwinds as far as economic data, have tailwinds we got some additional jobs coming on board, which is a positive, right? That should help. We need to reduce the unemployment rate in the youth. Gen Z is having trouble finding jobs right now. I know my son, who just graduated college this past summer, had a job, thank goodness, but a lot of his friends don't, and they're still looking. And these are people that paid $80,000, $85,000 a year for their education in college. And now they have a mortgage payment coming out, and they don't have a job to pay for this. So we've got a lot of headwinds there moving forward. So we've got to figure out the job situation. We need to create more jobs somehow, and then stimulus could be the greatest way to do that. not helicopter money stimulus, but stimulus that's really pushing for bringing more jobs here and incentivizing companies, whether it's tax and incentives or some kind of incentives to generate more jobs, because the unemployment is one thing we do need to look at. And again, if Powell looks at that, he will have to cut rates, but he should more aggressively cut rates. I'm expecting a 1/4 point rate drop, hoping for 1/2 point, but really, I feel like we're going to get a 1/4 point. All right, guys, hopefully you learned something here. If you did, make sure you click the like button, subscribe, and I'll catch you on the next video.